Hey everybody, what's up from Pokemon Classics, reminding you that the classics never go out of style. October is here, fall is in the air, and it's starting to feel spooky with Halloween just around the corner. But the thing that's truly terrifying are taxes. And for those of you that have been living under a rock throughout this year, there have been some pretty significant changes to the IRS tax code regarding online sellers, those who are selling collectibles or trading cards on markets like eBay, PayPal, Facebook Marketplace, and a number of online sites are about to experience some pretty major impacts. Now, with it being October, we're entering the fourth quarter of the fiscal year, and it's never too early to start thinking about how you can best prepare yourself to handle those impending 1099s that are likely to come in early 2023. Anyway, guys, in this video, I wanted to break down what some of those tax implications are, some of the latest news, as well as how you can best prepare and get your house in order before it's too late. Anyway, let's roll into this one. Perhaps the biggest piece of news for online resellers is the change in the threshold for issuing 1099s. Now, 1099 is basically a form that online marketplaces like eBay and PayPal are required to submit both to sellers as well as to the IRS directly to report the revenue from those transactions. Now, in the past, this was a pretty high threshold. It used to be 200 transactions and $20,000 minimum in sales transactions. However, due to congressional legislation earlier this year, that number has dropped for 2022 down to just $600. Now, this technically shouldn't change anything. If you were a seller and you made any income, any profit from your sales, you are technically required to report that on your taxes. However, without that direct form being submitted from the sales platform to the IRS, they were relying upon individual sellers to voluntarily report that profit. No longer will that be the case, and I think this is going to impact thousands and thousands of sellers who don't even realize that this is coming down the pipeline. In fact, the US government seems to be gearing up for precisely this scenario, with the recently passed Inflation Reduction Act allocating over $80 billion specifically to the IRS. And it's rumored that over the next couple years, the plan is to hire an additional 87,000 IRS agents. Now, it's been claimed that the goal of this additional money and the additional agents isn't to audit small, average, everyday Americans or those doing small transactions and sales and small businesses online. Maybe it's just my skepticism. Maybe it's the fact that the economy is struggling right now and that tax revenue will likely be significantly less going into 2023 than it was the previous year. But I can't help but feel that this is another one of those tax harvesting strategies that we've seen out of our government and out of our elected officials so many times in the past. So it's my personal opinion that it never hurts to prepare for the worst, hope for the best, and know what your liabilities are when it comes to taxation, as well as what you can do to lower that tax burden. So let's say you're a small-time seller who sold at least $600 in sales over the course of 2022. What should you do? Well, there are 3 suggestions that I have, and each of these should be done as soon as possible. First is to see a CPA or a tax professional. The sooner you can get good, legal, professional advice, the better position you'll be in when it comes time to file your taxes. Second, do your research. There are different benefits and drawbacks to different ways of filing your taxes, and the only way to know what's going to be best for you is having that legal advice, that professional in your corner, as well as understanding the difference between each. Finally, keep records of everything. Your purchases, your transactions, your materials, your costs, your expenses. There's a number of things that are deductible that most people don't realize depending on how you file your taxes. But having accurate and thorough records will only help that process later on. Anyway, guys, let's break these down into a bit more detail. All right, guys, before we go any further, I have to stop for the obligatory statement, the disclaimer that this is not financial advice. This is not professional tax advice. I am not a CPA, and that is why item number 1 on this list is to see a CPA immediately. Now, one of the things that I don't think a lot of people recognize is how many individuals are going to be affected by this new legislation. And I'm personally anticipating that come January and February, when those 1099s first make it through the mail, there are going to be thousands, perhaps tens of thousands or even hundreds of thousands of people caught off guard on how to even pay taxes or what they're responsible for. And it could be an absolute nightmare to schedule a CPA if you're looking to do that in the months leading up to tax time. So if it were me, I think that's a piece of advice I would offer, is the sooner you can get this done and get a strategy in place, the better off you'll be. Don't let yourself be one of those people that are being reactive to this situation. Instead, be proactive, because then you can even do some tax planning on your way there and help mitigate some of the damages of what is actually profit versus what are necessary business expenses. But we'll get to that a little bit more in a bit. Now, if you guys are entirely new to this and you don't know where to start, I would personally recommend looking up Mark 2 on YouTube under Not My Dad's CPA. Now, Mark is a former online reseller himself, who's also a licensed tax professional and CPA, and he started making a number of different YouTube videos and spreadsheets and other resources that I found immensely helpful just for getting started. Now, I do have my own personal CPA that lives much closer that I consult with on a regular basis, but as an online seller specifically, it's nice to be able to consult with somebody that knows the ins and outs of that specific field. So I'll leave a link for that down in the description. It's not affiliated, not sponsored in any way, but I did find it a very helpful resource when first getting started. Next, I would strongly recommend researching the applicable tax laws as well as the methods for filing taxes. Generally speaking, there are two ways to file taxes on online sales. The first is to file as a business, either a sole proprietor or an LLC, in which case you fill out the Schedule C to accompany your tax return. Now on the Schedule C, you're asked to list your gross revenue and then subtract the necessary deductions to determine your net revenue, your net income, and that's what you pay tax on, is just the profit made from those sales activities. This is advantageous sometimes because you're entitled to a number of different business deductions, which we'll talk about here in a minute. However, the disadvantage is, if you're self-employed, you also have to pay a self-employment tax to the tune of 15.3%, which can be pretty significant. Now, option number 2 for most individuals is to file as capital gains. Sometimes this is advantageous because you don't have that self-employment tax, but on the other hand, you're also not able to deduct all of those types of business expenses that you could deduct if you're acting as a business. Again, it's a gray area on how to figure out which one is better for each individual, and that's once again where seeing a CPA or a tax professional will come in handy for you. Before we move on, I wanted to provide a tangible real-world example of this. Let's say, hypothetically, you work a regular job where you make $50,000 a year, and in each check, taxes are automatically withheld. But in addition to that, you also have a side hustle selling cards on eBay, and over the course of 2022, for the sake of even numbers, we'll say you made $10,000. Well, since you already had taxes withheld from that first $50,000, this next $10,000 would be in that 22% tax bracket at the federal level. That's $2,200 you would owe. State level is going to vary from state to state, but here in Minnesota, the tax bracket would be 6.8% or another $680. Lastly is the self-employment tax at 15.3%. That's an additional $1,530, bringing the grand total to $4,410 in tax liability. That's a pretty scary number, and I think there's a number of sellers out there who are going to be drastically unprepared for this when they get those 1099s in the mail. And you can only make deductions if you file as a business, but also you've kept accurate records of all of those different business-related expenses. And that's where a lot of sellers are going to get wrecked. By default, the IRS will assume that all of the money you've made is profit unless you can prove otherwise. This brings me to my third and final suggestion, and that's to keep records of everything. Now, there are a lot of different things that could potentially count as a legitimate business deduction, and even if you don't qualify as a business or decide not to file as a business and go the other capital gains route, it still never hurts to be organized and to have this information readily accessible for your own benefit as a collector, but also if you're meeting with a CPA, how much they can help you depends on how much you're able to help yourself by having this information readily available. Now, there are a number of different things, different categories that you should consider keeping track of in a spreadsheet, keeping receipts for, and those include cost of goods, or the items that you intend to resell, knowing how much you paid for those initially. Improvement costs, which would include grading fees, storage fees, insurance fees, any sort of repairs to items. Shipping costs and selling costs, that might be the final value fees, the packaging, the commissions, any memberships that are required or subscriptions. And then there are a number of different business costs related to doing business. such as supplies, home office, mileage that you're driving, travel, different meals sometimes. There's a lot of different stuff, and the Schedule C breaks down each one of these categories in a bit more detail. I've done a more detailed video on this in the past, but here's a quick breakdown of some of those categories and some common deductions within them for those selling collectibles and trading cards online. First of all, we have fees and subscriptions. Now, any online seller knows that different platforms have their own selling fees, whether it be eBay, TCG Player, PayPal, WhatsApp, you name it, those fees are generally deductible against your total profit. Also, a lot of collectors and sellers out there will take raw cards and have them graded and then sell those graded cards. If that's the case, those grading fees are also usually deductible, along with any related costs like the shipping to and from the grading, as well as the insurance. Most sellers also use software in their day-to-day operations, whether it's record keeping or bookkeeping like QuickBooks, or even any content creation software like Adobe if you're editing videos for YouTube, or even the music through a place like Epidemic Sound where you're paying a subscription. Lastly, there's also educational research fees and subscriptions that can be deducted. If you're using that Reseller Tax Academy to get your taxes figured out, that's deductible. Or perhaps something like Patreon. Maybe you follow a PokeTuber out there that gives market advice and helps perform research. Oftentimes, that's also deductible. The next category is a bit obvious, but business supplies are also usually deductible, whether we're talking physical office supplies like the paper and ink necessary to print shipping labels, but also storage is something that people don't often think about. If you're using boxes to store cards or sleeves to keep them safe, card savers, top loaders, binders, those are things that are ensuring the condition of the inventory that you have, then they're potentially deductible. The packaging for the orders you're actually shipping, whether that's bubble mailers or bubble wrap, boxing tape. I know I go through a lot of boxing tape. Finally, other expenses. I know a lot of people have a P.O. box if they're running a business, as well as business cards or maybe a ship scale so that they can calculate the shipping on those orders they're sending out. All of that potentially deductible and worth keeping track of. This next category is where some of the more expensive items dwell, and depending on the type of business that you're running, you may be eligible to deduct these items up front in the first year rather than depreciating them over time. For most individuals, a PC or a laptop is necessary and essential to running an online business. And as long as you have that PC, those peripherals, the monitor, the printer, whatever things you're using are used exclusively for business, then it may be fully deductible. Same with photography equipment. Maybe you have a camera and lenses, lighting, storage devices, or tripods. If you're making online content like this, or you need it for listings or for social media or for advertising, often those types of things could also be deductible. Same with a studio or an office. I do a lot of online content. It's an integral part of how I operate my business and my eBay store. So having a microphone, having a different audio interface to connect it to my computer, some of those things can be deductible depending on their usage. Then there's also an other category, other equipment as it applies, perhaps a cell phone, security cameras, vehicles even. Those are all things that I don't personally deduct, but depending on your situation, it's something worth looking at with your CPA. Category number 4 is travel and mileage. And if you're going to different events or conventions, sometimes those are deductible if they're being done for a business purpose. I know a lot of people are going out to Collecticon. That would be an example of those that are vending at Collecticon that could potentially write off their tickets, their passes, their registration, their rentals, even the flights and hotels, the meals that they have while they're on those business trips, and even the vehicle mileage if you're driving for places for business. I believe the standard deduction is 58.5 cents per mile, unless they've changed that due to inflation, which I think I may have read something about. But there's a lot of different deductions pertaining to travel. Once again, this is where a CPA comes in handy to help you figure out what qualifies versus what may not qualify. Records, got to keep those records. Lastly, there are a whole host of other deductions, whether it's advertising for your business, or perhaps you relegate an entire space of your home, a room exclusively for business, well then you may be entitled to a home office deduction on part of your home. Your tax preparation at the end of the year may also be deductible. If you are hiring an accountant or a CPA or a tax professional to help you put together your business taxes and complete that Schedule C, well, you may be entitled to deduct that. And then there's even a qualified business income deduction. That's a little bit complicated, but essentially it states that 20% of your pass-through income or income from a self-employed business that meets a certain threshold of profit, it has to be under a certain amount, well, then you can deduct 20% of that as a sole proprietor or an LLC. It's a little bit complicated, but again, knowing all of this is helpful for when you go into that meeting with a CPA or a tax professional. In short, knowing what you're eligible to deduct as a business and taking advantage of those deductions will help you not overpay when those 1099s come in and tax season comes rolling around. If we look back to that example that we referenced earlier, if you made $10,000 on eBay and your total tax liability was $4,410, but you had a number of necessary expenses that wouldn't be that uncommon for somebody that's selling cards online and running a YouTube channel, well, with $6,000 of expenses of deductions, that would bring that tax liability down to $1,564. That's a pretty substantial difference, and again, it all depends on your personal situation. Anyway, guys, I hope this video finds you and finds you well here as we enter Q4 of 2022. The year is almost in the books, and I know it's been a really good year for me. I've really enjoyed all of the time I've spent in this community, interacting with all the other hobbyists out there. It's been a lot of fun, but I'm hopeful that that fun continues and that 2023 doesn't burn a lot of people who are unsuspecting of the situation with 1099s. Again, those 1099s are coming whether you like it or not, due to that recent tax update lowering the threshold down to just $600. Again, with the increase in IRS agents and the expansion of the IRS through $80 billion of additional revenue, I'm anticipating that there's going to be increased pressure to audit those that are not paying their taxes on these sales. I could be wrong, but I'd rather be safe than sorry. Again, I hope you guys all prepare, and if you have any questions, let me know down in the comments. I'm not an expert by any means. Again, this is not financial advice. I'm not your CPA. I encourage you to go find one. Most importantly, though, I encourage you guys to continue collecting, to enjoy the community that we have here, because it really is special. That's going to wrap it up for this one. I'm Pokemon Classics, reminding you that the classics never go out of style. We'll see y'all with the next video. Till then, stay well, enjoy collecting, and don't forget to have fun. We'll see you, everybody. Hey guys, I just wanted to say a quick thanks to my patrons for supporting the channel. If you have any interest in becoming a patron yourself, check out the link to my Patreon below. For more market analysis videos, you can click on one of these two. They're pretty good, at least I think so. Anyway, you should go check them out. I dare you. I don't really know what else to say, so I'll just disappear now. Bye-bye.